Very good evening to all of you. This is Business Today, your weekly business roundup brought to you exclusively on Channel I. And today is 10th of October 2018. And you know that we start our show with business personality segment. And today we have a business personality, an individual who has hands-on experience in several key sectors in Sri Lanka. So let's welcome our guest with the introduction clip.
Mr.Samantha Rajapaksa currently serves as the chairman of Kitra Holdings Private Limited and Rakuen Group of Hotels. He is the director of Bank of Ceylon, Asri Hospitals Holdings PLC and Lanka Securities Limited. He is a past pupil of Ananda College, Colombo and holds an MBA from the University of Sri Jayawardhanapura. He is a recipient of the Platinum Honours Award in recognition of professional excellence in the field of management, awarded from the Postgraduate Institute of Management from the University of Sri Jayawardhanapura. Mr. Rajapaksa is also the executive committee member of the Ceylon Chamber of Commerce and the president of the Sri Lanka USA Business Council.
All right, and he is Mr. Samantha Rajapaksa. He is a Group Executive Director of Infomatics and Chairman Kitra Holdings, and he's also a Director of Bank of Ceylon. A very good evening to you.
Thank you, Nisanka, and a pleasure being here.
Right, so we hope to talk about various sectors with you as you've been involved in several key industries in Sri Lanka. So let's start our conversation from there. What made you take such moves in your corporate career?
The start was in finance. Basically, my professional background is in finance, and I moved into accountancy and then pursued my career in marketing, did a master's. So it has been a more operations, specialization in operations management and general management. So I've been at the helm of many organizations at an executive level. The sectors have varied. I mean, I started in venture capital, moved on to finance, moved on to communication. It has been basically, the expertise has been selling a product or service. And I think wherever I've been headhunted and gone in most cases it has been a new field. But the learning, there is a certain learning curve, but I've stick to principles which I believe in and been able to adapt very fast to whatever the sector I've got into.
So how is that experience to be involved in various sectors?
It's a challenge. I mean, for example, if one pursues your career in one individual sector, obviously there's sector specialization which comes in. But the latter half of my career has been mainly on sales or marketing. And that's one area where I've been extremely successful in. And I feel that sales and marketing, where you have to have that grassroots level connection. My mantra on how I position myself in an organization or how I guide the organization is basic principle of customer is king, and a customer-centric philosophy which makes sure that the organizations transform to serve that customer the best possible way. So whether it be at SoftLogic, whether it be at AMW, whether it be at any of the companies which I am in. And also you need to have the humility to know that there are a lot of things you don't know, and that life is working, is a learning journey. And so you need to go to the lowest level to figure out what you don't know. You should be humble enough to ask the correct questions without assuming that you know everything or acting as if you know anything, which can be a recipe for disaster. So it has worked, and also working very closely with the respective teams and making sure you get the best out of the people.
Right, so you were appointed as a CEO of a listed company when you were just 28 years old, and that's quite a young age to be appointed and to take such a responsible position. How did this come about?
It was nothing planned. I think it's just positioning myself. When I started my career, I mapped it out with one of my uncles as to what milestones I should achieve, what professionally, academically, and career-wise. So by the time, at a very early age, I had completed most of my qualifications with CIMA, Chartered, CIM, MBA. And so I was academically, professionally, qualification-wise equipped. And then for my luck, immediately after leaving Ananda, I immediately started my career at Ernst & Young.
Right.
So by that time, I had already about
Experience.
10 years work experience under me. And I had a proven track record. I had already worked for Infomatics Group at that time itself, and I had completed my training at Ernst & Young and even at CF Venture Fund, which was a listed venture capital company at that point.
Now known as First Capital.
Yes, and we had transformed it. It had gone into a particular area of focus, which had the company in a dilemma, and we were able to reroute it and refocus it on power generation, on renewable energy and software, which enabled a turnaround. So that gave me the credibility, and for my luck, I worked with business personalities like Chandra Vijayanayaka, the former chairman of Central Finance, and I had many very senior level mentors. I mean, for example, when I was invited to join the board of CF Venture Fund, I was just 28, and the average age on the board was about 65, 70 years. And here I am wondering what it is. And I can remember the annual general meeting, which, I mean, we had about close to 85,000 shareholders. And here this 28-year-old is wondering. So it a lot of nightmares, a lot of sleepless nights. But I think I had great people advising me, guiding me in my career. And it has been a great journey since then.
Great. And how challenging was this task, as you were the person in charge of every aspect of the company, including its overall performance?
It's a challenge because it's not only this company, because CF Venture Fund, it was a venture capital fund. So in turn, we had investments in about 18 companies, equity investments, which in turn we were on boards of those companies. And we had to manage in such a way that it's not that we were giving loans, we were giving equity investments. So if the company does not achieve the desired objectives, we lose all our money. And so it's a high risk area. So working with those 18 subsidiary companies, working with a listed entity, was quite a challenge, and you need to be really on top of your game. You cannot allow anything to slip by unknowingly, because there is a lot at risk. So at that point, it was a lot of learning, talking to a lot of people, learning what you didn't know, and doing whatever we were doing, excelling in whatever the investments we went. One key factor which I think we really focused on was doing business with the right people, because we were basically getting into equity partnerships. So part of my strategy was identifying the people and making sure that they're the correct people to do business with. And I think my upbringing at Ananda, where we have students from all backgrounds, the ability to judge the backgrounds, the intentions of people, reading the character, and then my work experience up to now of 10 years at that time really helped for me to do that job really well, because end of the day it was you do business with the wrong person, you end up getting burnt.
Lovely. And you are also the chairman of Kitra Holdings.
Correct.
Can you talk a little bit about the business that you're involved in?
Kitra Holdings is a private investment fund, investment company which involved in. It right now primarily focused on investments in the hospitality sector. There are 2 boutique hotels which are ongoing, and there are a couple of other private equity investments. So that's something which I started off with a group this year, and hope to continue that and grow it as a private investment fund. It's moved into the hospitality sector for one reason, because I see it as a growth sector right now, and especially not in the large scale hotels, but in the boutique hotel segment. And right now, when you look at the tourism sector, there are a lot of challenges coming. I think most of the big hotels are having a lot of challenges, but I think the need of Davi is having niche products, which we can create to cater to niche segments without playing in the larger playground.
Right, so you just mentioned that you concentrate a lot on boutique hotels. Is it profitable at this particular moment when we find it difficult to attract high-spending tourists into the country? Is it profitable to concentrate on a niche market?
Like any other segment, I think the importance is to differentiate your product, whether it be hospitality or whether you're selling a product, a consumer product. You need to be able to have a differentiation, you need to be able to have a competitive advantage. So the focus areas are in the boutique hotel where there are unique products at this point of time, which is one is a glamping project, which is luxury camping, and the other one is a beach related project. And I see if you do your homework well, if you have the marketing tie-ups, if you have the proper people in place, there is a very high probability that it can be a success. I don't think we can stereotype saying that, look, hospitality sector is in a challenging era right now, and that all these projects will have challenges. I think if when you look at the hospitality sector, there are some hotels which are doing exceptionally well, and there are some which are not doing that well. And there's always a reason for that. It's a focus, it's a people behind it, it's a strategic direction, it is for what, when planning stage, how much investment has been put into those projects, and have those, is there any possibility that those projects can give a return? Because some have been real private initiatives to have a project, but without the commercial viability not being looked at.
Right, and we also find it difficult to keep tourists in Colombo. Average spending time in Colombo is quite low. Am I correct?
So I think that's a discussion area in tourism, in the sense of what is the product we offer as a country. When you look at other markets for which the tourists go into, even smaller countries like Singapore, every country has a unique offering, and they look at how can the tourist who arrives in the country, how can they spend their time. If you look at Colombo, once there's a limited amount of activities which they can do. If you look at Singapore, it is like they look at every single possibility of how they can keep that guest occupied and creating the wow experience. I think there's a lot for us to do as a country. I mean, the basics of even on arrival from the airport to departure. I think people who travel in and out of the airports know the experience is not the best. And if we differentiate it compared with the region, there's a lot to change.
Right, two key highlights of your profile and your corporate life are when you were at SoftLogic and also when you were heading MW. Can you talk about the progress these companies have made during your time?
Starting with SoftLogic, I joined as Director CEO for the Nokia operation in Sri Lanka, and also later on joined as a Group Director of SoftLogic Holdings, and I still continue as a Director of the Asri Group of Hospitals, which is within the SoftLogic Group. Right. That is the point where I think for the luck, being able to work with a visionary leader like Mr. Ashok Patirage was one factor which complemented my efforts to really take the company forward. Nokia at that time was the strongest brand, global mobile phone brand in the world. It still, even during that time, had a lot of global challenges in direction because of the technology platforms which they adopted. Right. But still, our sales and marketing efforts, we had a great team. And we were able to take the company forward despite all the competition. We had the Samsungs of the world. We had everyone coming in with large spending, marketing spends in the market. But we looked after our stakeholders. We looked after our customers. We looked after our distributors. And we managed to maintain our market share above 50%, although globally, Nokia was really losing market share in every single market in the world. So it's key of looking after your stakeholders.
That's quite an achievement.
Yes, it was, and I think it's kudos to the team as well, as a company, it was able to move forward. AMW is, I would say, looking back, one of the greatest turnarounds we've had in Sri Lanka corporate world. It's a 65-year-old company at that time. Today it's about 68 years, but during the 5 years we were there, we were able to make it have the most profitable period in its history. We had market shares in excess of 85%, which is unheard of in any market. We made Suzuki a household name. And again, it's a matter of putting the right people in place, having the right products, and working together as a team to take it forward. And one thing which we have had in Sri Lanka is many challenges in the business environment. And I think we've been, battered enough that we are very resilient to the changes which happen, and we are early adapters to the changes which happen thereon.
Right, so these are two totally different industries. What was your leadership style and approach in terms of managing your human capital, in terms of achieving your profit targets and also expanding your market share?
I'm very much, it's a team player. For example, I'm a team player, and I don't think any person who works for me who is not a team player has a place in the organization. From a leadership style point of view, I would view myself as a transformational leadership style, and also as a expertise-wise, it's more on a change management specialist. The SoftLogic Nokia operation was purely transformation into a leading entity where we were able to hold market share when all the other global markets for the product was collapsing. AMW there was plenty of competition in the market. We had every single leading automotive brand in the country. And to be able to achieve 85% market share, it's not only the product. Product is just one piece of the whole jigsaw. But our focus was when the times were bad, we would still invest in the customer area. Our after sales, parts, availability, and whether we sell a Suzuki Maruti, we wanted that customer to have the same journey as a customer buying a high-end motor vehicle would have. And that enabled us to really establish ourselves as a household name and be the preferred window for any brand new car in the country. And we had instances where when the real vehicle markets were up, we would, on average, when I joined, we were doing about 3,000, 4,000 cars a month, annum. And during the peak of our sales period, there were some areas where we were doing 4,500 to 5,000 cars per month.
Right.
So to really increase the supply chain to accommodate that kind of demand requires, it's virtually in management world, it would be considered impossible.
Right.
But when I strategized with our leadership team and said, look, these opportunities don't come often, and we really need to make it happen. We had the backing of our parent company to make sure that we had the adequate resources. But we really re-engineered the organization to deliver the results, and accordingly gain market share, gain to become one of the most profitable organizations in Sri Lanka at that time, and really take the company forward.
Right, and what's interesting here is that you are an accountant and you come from a finance background, and the understanding of the general public about accountants are that they are somewhat stereotype personalities and they are more focused on numbers.
Number crunchers.
Yes, definitely. So how did you achieve your sales and marketing targets here?
Right. I became an accountant by...
Not by profession.
Yeah, not by profession, not by planning as well. I was very much involved in every single sport or activity at school, and at the time I left school, there was a JVP insurgency going on, universities were closed, so although I got selected for university, I couldn't enter. So then the next thing which everyone during my time was doing, we'd do CIMA or Chartered, and I ended up doing CIMA Chartered, going into Ernst & Young as audit trainee, doing my training period 4 years. And suddenly by 21, 22, I pass out as a chartered and management accountant. But realizing that I don't want to be a number crunching accountant because my personality is not that. And since then I went into operations management, and I found that that was my forte, that was my specialization. But I think finance, that background I got from finance is very important to what the resultant benefit I had in my career, because that financial background gives you a direct input into analyzing the internal dynamics of an organization and how you strategize to develop organizations, to turn around organizations, to really re-engineer organization in the correct path. But yes, along with that, the fact that, chartered accountancy or CIMA, we are so used to studying from a textbook and then going and memorizing as much as possible and then going and writing. When I did the CIM qualification, and then suddenly you come to an open book examination, it's like a total different mindset, and you need to get out of that accountancy mindset and get into a more open outlook towards how you approach any problem. So today when we have issue which we need to resolve, I look at it from a very broad spectrum, from a finance point of view, from a marketing point of view. Ultimately, it's the basics of how do you treat a customer. And also one factor which I always ask my teams is, if you're the customer, would you be happy with the solution we offer? So it's not only, okay, we are the market leader, so the customer has to take what we give. We move away from that thinking. And it is always, if we are the customer, would we be happy, and would we be happy with the product or service which is being offered?
Right, so it was a great success story indeed, and I'm glad that we could share your success story with our audience, and thank you so much for being with us today.
Thank you. For sure.
Right, with that, we will wind up this session and we will move on to a short commercial break, and Uvin will meet you in our next segment. Stay tuned.
Welcome back to Business Today. We are actually moving on to our market discussion segment, and today we are actually looking at investment opportunities. And for our Business Today viewers, a familiar face is brought back to our studio. Mr. Ruan Pereira, the Chief Operating Officer of the NDB Wealth Management Limited, is here with us. Welcome to the show. Good to have you back.
Yeah, good to have.
All right, good to be back as well. So, Mr. Ruan, investment opportunities, there's a lot of talk about the investment market and the stock market these days in the news.
Yeah.
What is the current status of the equity market?
Well, lately, over the last couple of weeks, we saw the market coming down. It's coming down below 6,000 ASPI, all share price index, coming 6,000, below 6,000 value. So there are several reasons. Of course, globally the markets are not performing, the emerging markets are not performing well, and money is flowing out of to US because the rates are moving up and the uncertainty around the world. So in Sri Lanka also what happened was like there was a lot of pressure on the rupee dollar rate. So there's capital flight from Sri Lanka, and especially the foreign investors took money out of some of the stocks. So the prices came down, and of course the retail market is also not strong. So lately, so because of this sentiment, so because all those factors coming together, the market came down, and of course you need some good sentiment to move up. So that's the reason as a whole why the market would have come down.
So talking about investors right now, should they be leaving the market as the trend is happening?
Well, it says that you need to buy low, sell high. Yeah. Of course, when the markets come down, always there's opportunity. But it doesn't mean that, okay, just because the market come down, you should go and invest. So you need to understand what are the fundamentals. You need to, now for example, you have 250 to 300 shares in the stock market. You need to understand which stocks to pick. I mean, there are a lot of factors you need to understand.
Yeah. Talk about like the understanding what stocks to pick. What is the due diligence that people should be doing?
For example, if before someone invests, you need to realize, okay, can I afford to take a capital loss? For example, if I invest 1,000 rupees, if the market comes down 20%, that means my investment value will come down from 1,000 to 800 rupees. Can I afford to take that kind of loss? Okay, of course, if it goes by 20%, you'll get 200 rupees. 1,000 investment will go to 1,200. So you need to understand whether you can take that kind of risk. First one. The second one is your age is also a factor, because generally, if you invest in stock markets, of course, there are people who will go invest in the stock market. They will invest today. They can get a quick buck. They will trade. I mean, if market goes up, they will make a profit. If market goes down, they will lose. So, without looking at it, investing means it's like gambling in a casino. So, and of course, you need to figure out you're at that right age. For example, if you are a person who is living on your pension income or the retirement income, you got a retirement. For example, if you are 55, you get, if you are a private sector employee, you get a EPF. You take that money, put that money in a FD generally, and you live on your interest income, most of them. If I try to put that money into the stock market, that may not be the right thing. So you need to understand those kind of factors, whether the stock market is the right place for me, or whether I should have expert advice, okay, to invest. So that is one factor. The second one is the macroeconomic factors. I mean, if the interest rates go up, which stocks to pick? If it rains, what stocks to pick? I mean, whether some stocks, it may not be helpful. So likewise, you need to have a lot of understanding, and you need to devote a lot of time. You need to do research. You need to understand the market fundamentals. For example, if this foreign money come in, what stocks will impact? If the exchange rate goes up, which stocks will impact? So for an individual investor, if you try to understand those factors and invest, that is wise investment, and that means your damage will be minimum. You can minimize your damage, and so these are the factors. Then other thing is, whether you should invest on borrowed money. Because some of the people, you borrow money and invest, and then if you lose, you have to pay the interest as well as you have lost the money. So that kind of factors should be taken into account, because what we've seen is most of the time, when the market moves up, everyone jumps there. Okay. And of course, then you borrow money, invest, because you see some people being successful in investing and getting profits and being successful. So just because that, it doesn't mean you also can do it. I mean, you need to understand. So that's why you need to have sometimes expert advice, because it's beyond your control. So you need someone's help. So
that's the
yeah, because there are a lot of factors you need to understand, because
it's not just the external factors, it should be internal.
And you need to monitor it on a daily basis.
Yeah.
Whether you have that kind of time to invest, because if you, for example, if the prices of shares can move fast even on a single day. So if you are not focused, if suddenly the price comes down, then if you couldn't sell, you are making losses. So you have to be on the market.
So it changes, like recently the steel tariffs happened, so those things can affect the real world investors. So what are opportunities that people would have right now in the investment market?
Well, one of the factors is when we invest, you shouldn't be investing in one single stock. For example, if I have 10,000 rupees or 100,000 rupees or 1 million, I go and buy one stock. If that comes down, you are losing. But of course, if I have 10 stocks, then that means if 2 or 3 stocks come down, rest of the stocks can go up. So then I have a balanced return. So that means that is called diversification. So if you have a diversified portfolio, you can really sometimes be the damage can be minimized, as well as that is on one side. Then you can have some part of the investment in a fixed income side. So you have that is called asset allocation, where you have part in your share market, part in your fixed income. So that is asset allocation. So to do that, if you do that right perfectly, then you can balance it. So that's why now if you with 1 million rupees or 100,000 rupees, you can't have a diversified portfolio if you with good stocks. So for example, if you have 10, say 100, each of you have put 1 million. You have 10 friends, you collect 10 million. So you can create a diversified portfolio with that 10 million. So that is called pooling. And there's a vehicle called unit trust, where you pool people's money and then invest and then gain the profit and the whatever the benefits. And that is done by a fund manager or the fund management company. So for example, a fund management company, when they go try to invest for example, if you are investing in an equity unit trust, they will go to visit a company, do the research and see whether this company is worthwhile to invest, and what factors will impact this company if you are invest. So those factors are considered, and then the fund managers will invest. So, and it's a regulated industry. So then same way, you have other options as well. You have, say, equity funds, you have bond funds, you have money market funds. So you can switch between these funds. So if the equity market is not performing well, okay, you can shift to money market fund, which gives about 10.5. Or if the rates have peaked up and the rates are going to come down, then that means the bond prices are going to go up and the bond funds are going to profit. So then you can switch to a bond fund.
So that's a form of side diversification as well.
Form of diversification, as well as you can switch. So you have those options. So that's why, I mean, at this kind of, when the market is not right, you have a little bit of money, you want to invest some amount because you're also not sure where to invest. So best thing is to invest in a unit trust.
So do the research first and then
do the research. So you might have different types of fund. Not there will be money market funds, there will be equity funds, there will be bond funds. So based on your risk appetite, you can pick. So that's the best solution at the moment, because if you can't create your own portfolio with your little money, so then you can get created ready-made portfolio.
Yeah, talking about your savings.
Yeah.
Now, a lot of people save money and they put it in a fixed deposit. Sometimes they want to invest. Usually, what amount of percentage of their savings should they invest?
Well, again, when you have fixed deposit, you get, for example, you put 1 million, you get 10% return. That means you are getting a fixed amount of that. But you are fixed for that 1 year.
Yeah.
But of course, as I said, there are opportunities, like you have money market funds, which gives about 10.5. If you get a savings account, it gives about 3.5 to 4.5%. So you are getting high return. So then stock market is not consistent. So if you are uncertain, you can park money in a money market fund for a short period, then you can switch it to equity fund.
So there should be nothing should be 100%.
Not 100%. You need to understand, okay, which amount. So for example, in Sri Lanka, what happens is you get a income, then you pay your expenses, then whatever is left over, you try to save or you invest. But actually, if you are a smart person, you should have idea, okay, I'm going to save this amount. So you first, from your income, you have to set aside that, and then the rest should be spent. But Sri Lanka, it's the other way around generally.
So that's a lot of advice coming to you. Finally, like looking at the investment opportunities, in the future, there should be a movement towards the stock market as well, isn't there?
Yeah, as I said, I mean, if you buy low, sell high. You buy low, sell high. So at the moment, the rate markets are at at lower levels, but of course, it can go down further. So another way of minimizing risk is you invest a small amount, like 1,000 rupees or 10,000 rupees on a monthly basis. So you are gradually, if it comes down, then your average the investment value will come down, and then the market, when the market's time, because no one can perfectly tell exactly the point at what point the market will move up or move down.
So that's a judgment call.
So before, that's why you need to you can do a regular investment, so you can minimize that risk as well.
All right, thank you, Mr. Ranpera. That was very informative. With that, we are winding up today's edition of Business Today. Thank you for joining us. Do join us next time as well. But for now,